Okay, so we're gonna go over some market activity. Today, December 18th, watch list, which we only had two watch lists. We had AVGO, Broadcom on the swing watch list, and then we had SPY and QQQ on a day trade watch list. So we're gonna go over those, and then we're gonna scout through the market and see what setups that we have coming up. All right, so right here we have Oracle that we're watching. Right, we got the trap. So here at the 209 we have a gap fill on the daily, right, and this is the hour time frame. Right, it's already trended up. I already trended it. Right, found my trends. Right, labeled my lows and highs, and now just waiting for the trap. Right, so this last downtrend right here that's making the third low, we got to be mindful that anything below this 183, this 183 second low will be sufficient for a start upward. Right, as you can see today, it looked like it did that. Right, and we look to the left right here and see if it breaks this high. If it breaks this high, it is potentially starting that new trend up. Okay, so you always want to look for that to know if it's a break trend. Right, so this trend down started here at 231, and now it is currently at 189. It bounced up from this 176. Okay, I wanted it to come down a little bit more around the 150 area, but that was an extreme case, because as I've just mentioned, as long as it breaks below this second low, it is sufficient for a completed 3 high 3 low structure. And now we can expect a move up once this is completed. Right, and once this is completed, what we look for to know if it's completed, we want to see prior highs getting broken. So this was our prior high right here at 191 Wednesday, and as you can see, Thursday, December 18th, underneath aftermarket, we have made this upward movement. Right, it still doesn't look to be above this prior high, so we'll watch that. If it goes and break above this prior high, Wednesday's high, then we definitely should know that we are starting an uptrend. Right, so this will be completed and done, considered done, and now this whole yellow trend line can be completed and considered done, and now we could consider in this uptrend right here, the orange uptrend. Okay, that's for Oracle. All right, so we'll keep an eye on this. Right, and we don't want to jump the gun on things. Okay, so even if this is starting the uptrend, that's cool. That's just confirmation for us, right? And it goes above this prior high and start and come all the way up there to 204, let's say. Right, we don't want to jump in that going up. That's a no-no. We are confident enough to know that if it goes up, that's starting our uptrend. We know it's gonna come down. That's when we'll catch it for a bounce. Okay, so let's let this happen. That just assures us that we are in the right direction. We have the right idea. Let this happen, then we'll catch it on this, because this will be confident darn near close to 100%, you can bet your butt that it's going to continue up. So we let this happen, catch it on the bounce, the pullback bounce. All right, that's if it is starting an uptrend. All right, so we'll watch Oracle for maybe Monday. Watch list. Let's go and check out QQQ. So this was QQQ action today. We wanted QQQ to come down to the 598 for a bounce or break under, right? It came as low as 600, and that was pre-market. Nope, after market. So 4 a.m. right here. 4 a.m. it came as low as 602. All right, that was pre-market. All right, so pre-market 602 it came as low as, and when the market opened right here 9 a.m. to 10 a.m. this is the 1 hour time frame. I'm gonna go on to the 5 minute shortly, but I just wanted to show the higher time frame structure, right, and why we expected this to go up on the 17th, yesterday's watch list review, because this downtrend is said to be satisfied, showing us a 3 high, first high right here, second high, lower high, third lower high, first low, second low, third low. So this down structure, this black downtrend is satisfied, showing us a 3 high, 3 low structure. So that's why we mark this black uptrend, right? Expecting the uptrend, and that's what it gave us today, uptrend. And now you see a pullback, but that is only representing what we supposed to see inside of a trend, at least 2 high, 2 low structure. That's just all it's showing us right here, right on this pullback. But let me dial back a little bit, right, before we go there. So this is the 1 hour time frame. So now let's go in the lower time frame to see how we could have took advantage, what the watch list was telling us to watch out for, and see the best moves in that trade today. Okay, so we had QQQ. We was looking for a bounce and hold above the 598. We said that it never came to the 598. Pre-market it came as low as 602, and we also was looking for, if it broke under it, we would do a put, right? If it broke under this 598, we'll wait for it to break under, then we'll wait for it to come back and retest, and then that's when we would get in the put. So this was a break under, boom, broke under, then we'll wait for this right here kind of structure, then we'll get in right here for a put. Okay, so that's what's meant by a break and hold under. So this is the break and hold, right? And then we'll wait for a retest of the level that we were saying on the watch list, and then we'll have gotten in the put here. Okay, a bounce, we would look for something in this nature, come to this level, bounce up and get in for the call. Okay, but it did not come to as low as this level, as we mentioned. Okay, but it did come. Let's mark where it did come before we go to the 5 minute. So it did come right here, 9 a.m. right there. So it did come as low as 606. Okay, so these are where we need to pivot at. Okay, pivot means, all right, I know our watch list called a level. Pre-market was all the way above that level. What do I do now? Okay, so what you need to do to pivot, you need to always look to the left. So if the market opened here, then your pre-market is here, 8 a.m. and all of these. You want to gauge your high and your low, your pre-market high, your pre-market low. You want to gauge those levels to make sure that the current price that was made stays, confirms your call or your put. Okay, what I mean by that is these were your pre-market. This was your pre-market high. This was your pre-market low. Okay, this 605 pre-market low, 609 pre-market high. So now when this candle opens, market open, you want to gauge what it does at the pre-market high. If it breaks and hold under, then you want to go and gauge your pre-market low to see if you get a bounce and hold under that. Then now you watch for the original level. Okay, underneath the 604, you can possibly do a 598 put, right? Or wait and let it go to 598 and then get your bounce for the original interest area from the watch list. But the pivot, you always want to look at your pre-market high and pre-market low and the current price that the market is making at that time. If it stays above the pre-market high, then you know you can do a call. If it goes under, then you know you need to watch and wait and evaluate at the pre-market low level for a possible bounce. Underneath that, you go to the original price level that was called on the watch list. Okay, so that's a pivot. So now we're gonna go to the 5 minute. Okay, because the QQQ watch list said that we want a 598 bounce and hold, and that it had room to go to 615. Okay, so it did not go to 615 today, but it did go as far as 612. Okay, so this is the 5 minute time frame. Okay, the white top line, that was our pre-market high. Remember, as we marked that on the 1 hour, and this is what we gauge to know should we be in a call or a put if the market opens up beyond our watch list level of interest. All right, so as you can see, the market opened up. The market opened up here with this red candle. It went all the way up to 610, got pushed back down, closed at 609, then 935. It kept going low. It went low below the pre-market high, right? Closed at 608. At 940, went up, went down as low as 607, came back up, closed at 607.76. 945, went down, got bought all the way up to 608, got sold back down, came all the way back down to 606, got bought up, closed at 607.54. Then at 950 here, it bounced off of this 607. That was this red line right here is part of an indicator called the orb indicator, and you can put that on your chart. It is the open range breakout, so it's a kind of like a cheat sheet, right, for you to know the direction that the market wants to be in, and it gets created within the first 15 minutes of the market open. That's when these highs and lows get created. That's what it represents. The green is the first high within the first 15 minutes of the market. The red represents the first low within the 15 minutes of the market open. And as you can see, at 950, it bounced off of the low, went all the way up to 610. So that low was at 607, and it went up to 610, right? This call right here bounce was decent, but that's a 2.5 point move, which would have got you a good game because it was sharp and fast, right? Your options contract pay you based off of how sharp that move goes, okay? So this was a 10-15 minute move, and it went 2.5 points. It would have garnished you a nice 80 to 150% return, okay? Then it rejected here, right? As you can see, this is yesterday's low. This red line, yesterday's low. You got to keep that in mind as well, right? So all your yesterday activity counts for your today activity, because it could reject, as it did right here, yesterday's low up 610, went back down to today's low of 607, then it bounced again. Now this bounce at 10:20 a.m. was a great bounce, right? Because this bounce went from 607 all the way up to 612, okay? Close to our 615 reject that we had expected it to come up and reject that. So that's when I saw it, and I decided to go for a put, right? I marked this. I saw that this structure was made, almost a bearish flag, right? Because it's going in an upward. It's not like a flag shape. And this I put in the community, the pattern and what to be expected. And I probably got in here. Nope, up around here I got in, right? I did nope, I'm sorry. This is QQQ, but SPY made the same structure, and we'll go to SPY and see. I got in around here, and I rode that drop down and got out right here for 49%, but I could have rode it all the way. So I missed all of this drop, possibly 100 to 200% move. But I'm trying to practice something here. I already know we can grab those, so I'm not too concerned or mad, right? But yes, it went here, and as you see, all of these reject. This lets you know, if you didn't know this pattern shape, cool, let's take this off. You definitely know, oh man, it rejected here, came down, bounced, went back to that same roundabout level, rejected again, came down, look, and it's making lower lows, right? Came back up, rejected, same level. Okay, that's 3 rejects. You can go ahead and test you a put, right? And making yesterday's high your stop loss, meaning if it continue up, you go ahead and get out right there, right? Possibly so that's 612.89. Yesterday's high was 613.60. That's roughly a 75-cent risk, right? That you're gonna get out for a loss. 75 cents. You're risking 75 cents, maybe 25% in the hole for a 612 to 610, because you just gonna gauge it to come right here and bounce. So that's $2. So you're risking 75-cent move against you for a $2 move reward. That is a great risk to reward. I'll take that any day. Okay. And so it rejected here for the third touch up here, rejected and dropped all the way back down to close to morning opened low, right? And then it just chopped from there. So it bounced back up from there, 607 to 612, again around the same area, and went back down there closest to the low. And then so that's what it did. It played, we call this a tight channel, okay, because it never came as high as 612 and never broke low as 607. Okay, so That's what I called in the community. The QQQ and SPY is operating inside of a tight channel, and that is a 5-point channel, 612, 607. It's 5 points, which is great only if you are tackling your puts at the high and tackling your calls at the low. That is what makes the execution good or not. You're not going to tackle anything put in the middle. You're not going to do that. That's not a good risk to reward, right? I'm not getting in a put if the price, my candles are anywhere in this middle, and I'm not getting in a call either. When that thing in the channel, tight channels, you want to wait for a top to get in for a put, and you want to wait for that thing to be at a bottom to get in for a call. Okay, so QQQ didn't do exactly what we wanted because it came close to our bounce level that the watch list was calling pre-market, around here, pre-market. Okay, 4 a.m. came as low as 600, and we was looking for it to come to 598 for the bounce up. Okay, so when times like that, again, we have to pivot. When the market open, we have to check our pre-market lows and pre-market high, and mark those and watch what our price action does in regards to those levels. Okay, and that's how you make your decision if you're gonna do a call or a put. Okay, all right, moving on. We have SPY, and as you see, SPY, QQQ, they did the same type of action. So same type of structure. Okay, so SPY, we was looking for SPY to bounce from the 669.78. Again, pre-market right here, it bounced, came 671, as low as 671.83. Okay, it was pre-market, and then when the market opened here, we need to mark our pre-market highs, which would have been here, 677. Pre-market low would have been here, 673. 677, 673. That's what I'm gonna gauge, right? That's my overall gauge, but I'm gonna use my orb for my immediate decision maker. Okay, when it's outside of my orb, below outside of my orb, I'm gonna go ahead and gauge the pre-market low and make that my bounce or break under level to know if I'm gonna do a call or a put. Okay, above, same. But the orb, again, it makes your current market open, the first 15 minutes of the market open, it makes the low, it makes the high for you. Okay, cheat sheet. So the market opened here, this green high wick candle. So the market opened, went all the way up to 678, came all the way back down to 677, pre-market high, got bought up and closed here at 677.80. Next candles, 935, opened, came, pushed all the way down to 676.66, got bought up, 676.99, closed. 940, same thing, pushed all the way down, sold, 676.13, got pushed up, closed at 676.29. Next candle came down, 945, right? I pushed all the way up to 676.83, pushed back down, sold all the way 675.75, bought back up to 676.15. 950, bought up, came back up to this, the open high, rejected, came back down to the open low, bounced. This was the best bounce right here, 676 at 10:20 a.m. Went all the way up to 680. chopped around 680. That's where I got in at, roughly around here. I think I called 680.65 as my stop to get out if it kept going up above that. It did not, so I stayed in it. It dropped here, I got out here, 49%, right? Kept dropping, went below our low, stopped at 674, which was the second high, the second pre-market high, right? So prices and candles do not stop in the middle of nowhere. If you look to the left, it's going to always stop at a prior high. Always, 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 always. That's why the prior highs are very important for you to gauge when the market candle prices are moving down or up. Okay, so as you see here, it stopped at 680. Look to the left. 680-ish was yesterday's high and pre-market high. Okay, so that's important to know. And we had SPY rejecting that 680.36. That's why what made me extra confident in that put, right? We had that on the watch list for a reject. Okay, and that's what it did. It rejected around that area, came back down, and then it just chopped, right? But these, when it's chopping, that means it's in a range, okay, in a tight range, right? And this range just so happened to be a downward channel type structure, right? And in those, you won't always want to get in your puts at the high, at the channel trend for a put, or get in it at the low of the channel trend for a call. Okay, all right, nice. Okay, so that's what we have for our day trading, right? Let's go ahead and check out. And again, we had this up activity that we expected. We called that on yesterday's watch list review, that the structure will go up because the downtrend looked to be complete. Okay, so that's important. And another thing, right, with SPY, I see, let's analyze something really quick of the next possible trend. So as you can see here, our uptrend started, right? And we wanted to be mindful of this uptrend because of this whole downtrend right here. Okay, so as you can see, the black downtrends. So this is our first high. Okay, this is our first low. This is our second high. And then look at here, this is our second low. So this is the black trends have shown us a too high, too low structure. Now this black uptrend could absolutely be just a third high, right? Could just be a third high, giving us possibility for a downtrend to complete the 3 high, 3 low structure. So this could just as well be the scenario for SPY, right? Giving us that first trend line, right? Because this trend line right here, this downtrend, could be satisfied with a 3 high, 3 low structure, or it could be satisfied with just this 2 high, 2 low structure. And this could be not true, and then this could keep going up, giving us a too high, too low type of structure. But how we gauge this is this first low. So this structure right here, we know the rules. If this was going to be a 3 high, 3 low structure, if this was going to be a 3 high, 3 low structure, finishing off a downtrend right there, then this right here cannot come, break, and hold a body inside of the first down, first low. And as you can see, that satisfies, because none of these bodies at the top came and broke where these first low bodies are. So I would lean towards SPY doing a downtrend, finishing this white downtrend structure with the third low. We know the third low has to break below this second low, which is 671. So that's what I would expect for SPY, unless this high 680.52 gets broken. If this 680.52 gets broken up, then we are in here. We can expect continued movement up to go test this 690. As long as this get broken above, making a new high here. If this remains the high, then we can expect 1, 2, 3 down, finishing off this structure. Now this whole white structure would be complete, and then we can expect right, so that'll be on the watch list for tomorrow. All right, so let's go check out AVGO, which we had on the watch list, and it just stayed in that area today. So we'll definitely keep an eye on it. Right, it looked like it bounced from that 324.23. Right, bounced yesterday at 12 noon. It went up. Right, came back down, made a higher low right here, and now it looks like it wants to come make a higher high past this 336. So we'll watch this, right? Because look at the Monday's low. We'll gauge it. Like we'll gauge what it does in regards to Monday's low. Okay. Right, so if it break above Monday's low, it's the hold, then we are en route up. Okay, all right, because we know we have a gap to fill at 389. Okay, so if it break above Monday's low and today's open high, then we're still not gonna just jump in it, because this is the structure that it will have made. Okay. We will wait for a bounce back to get in. Okay, so that would be the best entry. Okay, letting it do this, letting it do it, catching it on the comeback, and then we get in it. Okay, so that's all we'll wait for AVGO. Okay, but I still want it to come to 309. I really do. The lower it comes, the best we can get it at for a stronger continuation up. Okay? And that 309 is August 14th high. So that's why I'm kind of like, okay, it may come there and test that. But it bounced right here to 324 because of October 10th's low right here. Right, so it didn't just bounce in the middle of thin air and redirect it up. No, you want to look to the left, see what else bounced at that level. And if you get 2 or more touches, then that level is official, and you need to respect it, because the the market is going to respect it. Okay, and that's what we have for AVGO. All right. I like Uber. I love Uber. I want to catch it again for us. Uber gave us really good gains when it did our last time. I think last week or something we got in Uber. This structure right here is possibly complete, right? Because as you see, we see a 3 high, 3 low structure. You see the dots. We got 3 dots at the top, 3 dots at the bottom. It's a 3 high, 3 low structure. And with that structure, we can always say that this trend is complete. Okay, we can say that, but the trend can always extend as well. It can extend as well. All right, so it could be complete here. How we gauge that is this low right here at 78.84. If this low remains, then the trend is starting a new trend up. Okay, and that's cool. We'll let it do what it do and catch it on a reject. A bounce back, and then we can enter. Okay, but once this trend show us it's done with a 2 high, 2 low structure or a 3 high, 3 low structure, we need to expect an opposite trends about to happen. Okay, so that's where Uber is right now. Possibly starting this uptrend, or we gauge this Friday, November 21st low of 81.51 to see if Uber is still in a downward trend to come to our 76 area, possibly 70 area. Okay, so that's what we'll gauge. This 80 level. If it rejects that, then we are definitely in a continued downtrend, stretching this out. Okay, so but I like Uber. We're gonna catch it. It will make our watch list for next week for sure, because as you see, this black downtrend line is wrapping up, because as you can see, the white trends within it has shown us already a 3 high, 3 low structure. Look at the white trend. First high, first low, second high, second low, third high, now third low. So we're just waiting for this black trend to finish up, show us our 3 high, 3 low structure, and then we know we're gonna be starting an uptrend. That's what we're gonna get. Right? Archer, we played that. Oh, look at Archer. Oh man, it played us early in the week. We was in a call, but it kept this coming down. I had to alter my bull flag pattern structure. It still fitted, right? So it's still in a bull flag structure. As long as it can hold this low right here, 758 remains the low, then we'll see if it break above this 8, then we can possibly, take advantage of it above the 815, because in a bull flag, we could expect the price to go and test the top of the flagpole, which is at $9. So if we catch it above 815, show us some strength, upward mobility, we'll go ahead. It'll be safe to get in for a call. Okay, so we still have Archer. Maybe for next week, we'll put that in there. Key, I know we was looking at Key, and I've been watching it, and I've been amazed, honestly, because Key should be working its way down right now. But it wants to continue up. The market's always right, so it's not ready to come down yet. Okay, so let's see. For a quick analysis, right? We are in this trend leg right here, from the lowest point to the high, and then this black trend represents all of it from the low to the current high. And now what we see in this black uptrend, we see it made a too high. So first low right here, first high right here, first high, second low right here, and second high. So we know we're in this second high trend, right? So why I was expecting a pullback is because it already completed a too high, too low structure on this uptrend, black uptrend. Now we can expect a downtrend overall, right? Saying that this uptrend is satisfied, or we can expect that this uptrend still wants to be an uptrend. So it's still need to come and pull back before it continues on. So that's why I was expecting a pullback. And if it pulls back, it will come test the first high area. So the first high area is 1832. So it should come test in this 19 to 1832 zone if it wants to continue to move up. Okay, it needs to come back down and gain some momentum and some buy-in power. So that's what I am expecting for key, right, to come on down, right, still maintain this structure to go up, right, and then this would be like that. This uptrend structure would continue on with making a 3 high, 3 low structure inside of it. Okay, but if that's not the case, then this uptrend structure will be done, and now we know we are making a down structure. Either way, we gotta come down. So anticipating that, we'll know. How do we know? Let's look to the left. So on key, is this key's all-time high? No. So we look to the left here, see what we got right here. 2205 is key's all-time high. So we'll gauge it for that 2210, 2205. So it still could come and test that 2210 level. That's why I have more confidence that this uptrend will continue, but in order for it to continue, it needs to come and get some more buyers. So it needs to pull back in the zone to continue the uptrend, to test the all-time high of 2210. So I'll keep an eye on it, and then we'll evaluate key for some entries. All right. So that's what we got. The market is great. We had some interesting economic data being released. We got some mixed data in the things that the administration is saying, how good the economy is, and all of these different companies investing in AI chips and still building data centers, and just all of these different communications and easily hard to identify what's what, right? And that's confusing, right? But we follow the money, we follow the trend, and we shouldn't be too far off, okay? But the data says that the economy isn't good. Inflation's hurting people, things are costing more, jobs are being laid off, so people are about to start hurting. Tariffs is just making it hard for companies, and companies are putting the price on the consumers. So that's what the data's saying. But The mouths are saying the economy is great, you know, the lowest inflation ever, and prices of food and groceries and stuff is low, and companies are headquarters and coming back to America, the headquarters and you know, people are building mega data centers, so the economy is great. So it's mixed, right? So that's them billionaire boys, and that's how they run up the bag, right? They set all their money in the stocks, and they get mega returns on it, right? Although the economy is not good, because the facts are the facts. We on ground level. We know gas is up, prices of eggs is up. We know that, right? So we know what it is. But like I said, we follow the trend and put our money where the money at, so we can get some monies. So let's stay diligent, let's stay sharp, and we good. I salute.